Gold is getting insanely expensive. But why? Is it because Indians are buying more jewelry? So the answer would be no, because the recent rise in gold prices is not just a jewelry story. In fact, in the first quarter of 2026, the global gold demand hit a record of $193 billion, while the overall demand for jewelry by volume actually fell. So what's really driving gold? Before we talk about India, we need to understand something. Gold is traded globally. So gold is traded globally. So the price of gold in India is also determined by what's happening in the global gold market. And recently, gold has been supported by several forces. For instance, global uncertainty, central banks buying of gold, expectations around interest rates, and whatnot. So when uncertainty increases, investors often look for assets they find safer, and gold has historically been one of those assets. So when investors become nervous about stocks, global economy, and currencies, then the demand for gold often increases. The second reason is central banks are buying gold. So central banks hold foreign reserves globally, and a large chunk of those reserves are held in currencies and government securities. But gold is also a reserve asset, and in the first quarter of 2026 alone, central banks around the world have added around 244 tons of gold to their reserves, and that's a massive amount. So the purchases of central banks represent a different kind of demand, and they are not buying gold because they saw a jewelry advertisement. Instead, they are buying gold because they are managing national reserves. The central banks are not the only buyers. Investors are also buying gold, and this is where things get really interesting. Globally, bar and coin demand have reached 474 tons in the first quarter of 2026, which is an increase of 42% over the previous year. So, gold is increasingly becoming an asset of investment rather than simply something that you wear. The fourth reason is interest rates. Gold doesn't pay interest. So when bond yields and interest rates are high, investors start looking for those assets which generate interest rate. But when market expect lower interest rate, then at that point gold becomes increasingly attractive. And this is one of the reasons why investors often look for things like US inflation, Federal Reserve rate expectations, bond yields, and so on. Now, this is the part which is especially important for people in India. Gold is traded globally. So, India imports most of the gold that it consumes. This is the reason why the price of Indian gold is not only determined by the international price of gold, but it is also influenced by rupee dollar exchange rate, import duties, and other costs. So, if the international price of gold increases and rupee weakens against the dollar, then the Indian gold price will also get an additional push upward. We're actually seeing an important change in the Indian gold market. According to the World Gold Council, in the first quarter of 2026, India's gold demand increased by 10% year on year to 151 tons. Meanwhile, the jewelry demand by volume actually fell 19% because prices were extremely high. So, despite gold becoming very expensive, people were not necessarily buying jewelry. In fact, a large part of the demand was coming from investment. So, is gold going to keep rising? Actually, nobody knows for certain. Gold prices can actually fall. Changes in interest rates, investor positioning, central banks' buying behavior, all of this can change the direction of the market. So, instead of asking, should I buy gold right now? A better economic question would be why the entire world is demanding so much gold at this price. And once you understand that, you understand a lot more about how the global economy actually works. And if you do enjoy about money, economics, finance explained simply, then do subscribe. I'll see you in the next video.